Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the IPO conversation that we're going to be having. A focus of this special session is Canara HSBC Life IPO, which is a book build issue of 2,517 crore rupees. The issue is an entirely offer for sale of 23.75 crore shares. Remember, the price band for this IPO is 100 to 106 rupees per share. Today is the last day for the subscription as well. So far, as of yesterday, 0.3 times of a subscription is what we had seen, and it's moving closer to the last day of subscription. We'll try to find out now from the top management the kind of vision that they have for the company as it gets ready for its D-Street debut, and of course the growth focus areas as well. Let's welcome on board Mr. Anuj Mathur, the Managing Director and Chief Executive Officer of Canara HSBC Life Insurance Company. Let's also welcome Mr. Tarun Rustagi, the Chief Financial Officer of Canara HSBC Life Insurance Company. Warm welcome to both of you. Good to have you with us. Thank you so much for taking the time out. Mr. Mathur, to start off with you, if you could help all our viewers understand that, what is the aim with which you are launching this IPO at this stage in time. If you could help us understand the timing at this point as well, since it's an entirely offer for sale, which means that the entire funds that you're raising is going to the selling shareholders and it's not getting raised for the company. So what exactly is the thought process here, and how should your fresh investors really look at any kind of value creation at this point, sir?
Yeah, thanks, Sakshi. Good morning to all the viewers, and thanks for having me on the show. So the purpose of this IPO is basically to provide an opportunity to investors, external investors, retail investors, and institutional investors to participate in this growth story. So few things I would like to mention for the investors. See, we are a 17 years old company. We started our business in June 2008, and we have very strong track record of profitability. So that's something very, very special, and that is because of the bank assurance model, which we are following for the last 17 years. We are actually very fortunate to have this bank assurance model, which is really successful in the industry, and having two trusted brands, Canara Bank and HSBC, as our shareholders. And we have got huge access to customer base of these banks and other banks we have, as well as a few other alliances which we have got. And we are very confident about our future. If you see our past track record in terms of business growth, we have actually outperformed the industry, consistently making profits for last 13 years. We achieved a break-even in fifth year itself, which is pretty unique in insurance industry because typically it takes 10 to 12 years for any insurance company to break even. So we are actually in a very solid space. And the purpose of this listing is sort of part dilution by the existing shareholders. And as I mentioned, it is to have wider participation because as a business, as a company, we are now a grown-up company having strong financials. So this is an opportunity for wider public to participate and be part of this growth journey. The reason we are not raising fresh capital is, as I mentioned also, like we are very profitable. Our solvency ratio is very healthy. Against regulatory minimum of 150%, we are over 200% on solvency. So we have very decent internal accruals, comfortable solvency position, and all our investments we are funding through the internal accruals we have. So that's in terms of our long-term growth and strategy. And you can see the business model is very, very superior, and we are well poised for growth.
Fair point. I'll come to your overall business model to ask you to explain to our viewers what exactly is the bank assurance driven network and how it's really helping, since you touched upon it. But let me just take a word from Mr. Rustagi as well on the shareholder clarity as well. So pre and post IPO, Mr. Rustagi, if you could give us an understanding of whether the shareholders will be also tendering their shares when it comes to through the post IPO shareholding, and how will that really look like at this point in time too?
Okay, so currently Canara Bank is holding 51 and post listing, so they're diluting 14.5, so they will come down to 36.5. So both Canara and HSBC are promoter, and PNB is our investor. So PNB is diluting 10%, so their holding will come down to 13%, and HSBC is just diluting 0.5. Their holding will come down to 25.5. So promoter holding will come down from 77% to 62%, and the public holding, which is currently at 23%, will come up to 38%. So this will be the pre and post IPO scenario.
Okay. Mr. Bathur, if you could now explain to us your overall business model for all our viewers to understand, especially, and if you could highlight on the bank assurance driven network and how is that really leading to higher profitability, and you've been sustaining it for many years now. So how is that really aiding growth?
Sure, thanks. And it's a very good question. So we have Canara Bank and HSBC as our promoters, and they distribute also in India. Along with these two banks, we also have few other regional rural banks, other few smaller banks, and the model of bank insurance is very, very cost effective, and it also kind of it reflects into the trust which customers have with the bank, wherein we have seen in the last 20 years, if you look at the bank assurance model in the industry, the top 10 players, which includes us also, bank assurance has kind of led to growth of these top 10 players. So it's a very, very cost effective and provides wide access to the customer base. If I have to talk about Canara HSBC Life, we have access to 15,700 branches across these banks, and we have access to over 120 million customers, 12 crore customers, which is more than the population of many countries. So that's the USP, that you are able to reach out to customers and offer product which is very, very competitively priced. One more benefit of bank insurance business in our case is also the cost ratios. We are very, very efficient organization, and as a result of which, we are able to price our products very, very competitively. We are able to offer better returns to our customers. So that's the beauty of bank insurance model in our case, and this model has done really well in the last 17 years, and we are very confident that with this, we'll be able to expand further. Talking a little bit more about our diversification drive. So while bank insurance is our area of focus, but at the same time, we have also diversified in the last few years. So we have digital channel wherein we sell policies directly through our website, plus the web aggregators which are there. We have a defense channel which caters to armed forces. So these are our people selling insurance in defense population. And then we also have direct sales team, and they also go and solicit business from the open market. Recently, we have launched agency business. So just as a diversification drive, and as I mentioned, now we are in terms of our profitability, in terms of our accruals, we are very, very comfortable. So that's where we thought it's time for us now to also launch agency, which is slightly capital intensive. But now, since we are very, very comfortably placed in terms of financial performance, this is the time we have started with agency, and we see growth coming from agency business in the next few years. We are going to ramp it up in a phased manner.
Sir, could you help us break down how much of your business really comes from each of these channels, and what is the anticipation on the newly started agency business over the next course of 1 or 2 years as well?
So right now, a bank insurance channel contributes roughly about 90% of the total business.
Okay.
Alternate channels are in the range of about 8 to 9%. And agency, since we have started, and as I mentioned, we are going to grow it in a phased manner. So we will see growth. I don't want to give forward-looking statement right now, a number here, but agency is one channel which bases the investment you make, bases the agents you hire, you can really scale it up. So we have some plans, decent plans, and you will see in coming years, our agency business is going to grow. I would also like to emphasize of the strong brand which we have. Canara Bank, which is the fourth largest public sector bank, and HSBC, which is an international bank. So once we start our agency business, the two brands which are part of our brand will also help us to scale up the agency and to get customer interest in our products.
Okay. What about Mr. Rustagi, to you, when it comes to the product mix, can you help us understand that as well when it comes to ULIP, endowment, term plans as well? And if you could help us understand what is the kind of VNB margin that you have?
Yeah. So, traditionally, like, before 2025, we were actually dominating on the traditional product portfolio. So having a balanced product mix, we can say that our organization was always focusing on the balanced product mix to cater to all the customer needs. Last year, we all saw that, how the stock market performed, and therefore there is a skewness in the product mix, which you can see in our company also towards more unit link. But we have come back again. If you look at the June numbers, we have come back again and again, balancing out these product mix. So it is balancing between unit link, traditional. In traditional, we have protection business, which is, which we are focusing on. And with the GST coming in, benefit coming in, this is one area which is going to be much more affordable from the customer perspective. And on the annuity side there is a significant segment which is available, customer segment available both on the Canara and HSBC side, which is actually looking for annuity and deferred annuity basically. So these are the 3-4 products which we are focusing on and helping us in terms of growing our margin also. So currently, if you look at our margin is around 19.5, and with the focus on protection, annuity, and saving, along with the balance unit link, we expect that this margin is expected to grow over a period of time.
Okay. Mr. Mathur, coming to you, as far as the valuation part is concerned, a lot of analysts have highlighted that the valuation at which the IPO is coming in is higher than the peers at this stage. Do you think that is one reason where we have seen a slow start to the subscriptions at this point? How will you be able to look at the valuations at this juncture, and do you think your improving financials will be able to justify it going forward?
Yeah, no, I'm glad that you asked this question, and this is a very important one from investors' perspective. So I would like to clarify that in life insurance business, the valuation is a multiple of the embedded value. Because the business of life insurance is such that you get the benefit of premiums, regular premiums coming over a period of time. So there's embedded value, which is calculated, and the price or the valuation of the company is a multiple of embedded value. So if you see our multiple, we are currently at 1.6 times our embedded value. And in terms of other listed peers, I would say that we are fairly competitive in terms of our current pricing. That information is publicly available. Our EV multiple is lower than the competitors which are currently trading on the market. We have kept our issue price at a level which is at multiple, which is lower than the current listed peers. So I just wanted to clarify that this is what the actual position is. And by the way, for most of the corporates, people look at the PE ratio. PE ratio is not relevant in case of an insurance company. More important is the price to embedded value.
Fair point. Okay, Mr. Rustagi, could you help us understand over the next, say, 3 to 5 years, what kind of growth and margins are you looking at internally? Growth for premiums, and do you also expect margins going forward from here also to improve from the band you marked out?
Would be difficult for me to give you a forward-looking statement, but what we have delivered is outperforming market over last 10 years. If you look at the public information in terms of top line, and what we are driving is continue to that kind of a growth, which will expected to outgrow market. So if you look at last 3 years CAGR, we have grown our top line at a rate of 17%, whereas market overall industry has grown at 10 to 11%. And in terms of margin, our current margin is 19.5, and we have, there is a scope of improvement, and over a period of time it will improve. So another thing which is very, very critical for viewers and investors to understand is the age of our company is 17 years old, whereas when we compare with the listed player, they are 25 years old organization. So as you grow, you are able to absorb the cost and increase the margin over a period of time. So when these players were at this age, their margins were actually, our margin is much better than, as compared to the age of those listed player. So as we grow our business, as in-force book will grow, as the product mix will shift, the margin is expected to grow.
Okay. Mr. Mathur, towards the end, I wanted to ask you a broad question, and that's on the recent shifts that the industry has seen because of the GST cuts that has happened. What has that resulted in? Could you give us an on-ground understanding of whether the GST cuts on life insurance products has increased any sort of demand there already? That has been the intention of the government. How much of it has already come in? If you could give us a historic vis-a-vis current picture to help us understand, and of course, what is the expectation going forward?
Yeah, actually, it's a very big relief which the government has given. So I'm really grateful to the government for taking this decision and helping the customers. Because if you see, straight away, there's 18% benefit which has kind of come to the customers. This change happened on 22nd of September, and we have made this change. So we have passed on the full benefit of this to our customers. But at the same time, I would like to mention that these are early days. And we have seen good demand uptick, which has happened since then. But you will see the long-term benefits of this. When I say long-term, they will be visible from now onwards. And another 6 months or so, it will take to kind of grow the market. definitely this is going to grow the business for the industry, particularly for us also as an insurance company. So I think it's a very big benefit, and we are going to see surge in insurance business in next couple of months, which will be visible.
Okay, thank you so much, Mr. Mathur, and thank you so much, Mr. Rustagi, for being with us then. And all the best to you for the IPO and the listing going forward. We will, of course, catch you around with the quarterlies now. Thank you so much.
Thank you very much. Thanks.
All right, viewers, we'll wrap it up on that note as far as the conversation on Canara HSBC Life Insurance IPO is concerned. I hope this interaction with the top management has really given you the insight as to how the company is confident about growing its financial performance and, of course, creating a lot of shareholder value as well going forward from here. Many thanks for tuning in. Do stay tuned. It's an action-packed day out there for you with our Diwali special market conversations following next. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our festive special conversation. It's